Welcome back. Now let's revise registration chapter. Now, the first discussion is about who is required to register. See, any person who is liable to register. How do you get to know whether he is liable to register? We will read section 22 and 23 and 24. That's when we get to know whether a person is liable to register or he can voluntarily take registration. Now, once you take registration, you get a GST identification number, which is a 15-digit PAN based alphanumeric code. First two digits represent state code, next 10 digits represent PAN, 13 digit is number of registrations in a state, 14th is fixed as Z, 15th is system generated. Now, registration is PAN based. So, you take registration and mention the place of business. Now, place of business is defined in the law. Place of business is a place from where business is carried on, and it includes a godown, warehouse where goods are stored or goods or services are received. It includes a place where books of accounts are kept, and last one, premise of an agent from where principal is making taxable supplies. Now, place of business can be of two categories. One, principal place of business, and second one, additional place of business. Principal place of business is the one declared as principal in the registration, and all other places of business in the same registration are called as additional place of business. So tell me, when there is a transaction between principal place and additional place, whether GST will be applicable? The answer is no, because they are under the same GST number, they are under the same registration. Yeah, if there are different registrations, say suppose in Karnataka we have taken two registrations, then those two registrations are regarded as distinct persons. Then we have three important discussions. Section 22, persons liable to register. Section 24, which talks about compulsory registration, and section 23, which talks about persons not liable to register. Let's start discussing these three. Now, first one, section 22. The first person who is liable to register is a person whose aggregate turnover in a financial year exceeds specified limits. These limits we discussed at the start. For goods, 10 lakh, 20 lakh, 40 lakh. For goods plus services or only service, 10 lakh and 20 lakh. This was the initial discussion which was done. Now, careful that the law talks about turnover in a financial year. It does not talk about preceding financial year, because when you are reading exemption chapter or composition chapter, PFI turnover is used, but here turnover of the financial year. So if you cross that turnover, then you are liable to register. What's the meaning of aggregate turnover? Aggregate turnover means taxable supply, exempt supply, interstate supply, export of goods or services, but does not include GST and inward supply under RCM. If it is calculated on an all India basis for all the branches under a single PAN. Plus, if there are branches in different states with different registration limit, then lowest limit will be considered from the place from where I am making taxable supplies. Wherever I am making taxable supplies, there the lowest limit will be considered. Earlier law, if I was registered under the earlier law, then in that case I had to become registration under 22. Transfer in succession. See, transfer in succession is required only when the transferor was a registered person. Say suppose the transferor was unregistered, then it is not triggered. And the last one is transfer in amalgamation, merger, demerger, etc. In these cases also, the new company, that is transferee, has to take registration. Then coming to section 24, which talks about compulsory registration. Now 24 clearly says that I override 22(1). That means irrespective of the turnover, you have to take registration. First one is interstate taxable supply of goods. Careful, services gets a relief under section 23, so it only talks about interstate taxable supply of goods. If you are providing services interstate, then the limit of 10 lakh 20 lakh will be applicable. Goods interstate, mandatory registration. Even if you do one stock transfer from one branch to another branch in different states, then in that case it will be leading to compulsory registration. Then a person who is liable to pay tax under RCM. If I am a person liable to pay tax under RCM, then I have to compulsorily take registration. Then an eco which is covered under 9(5). So Ola, Uber, Swiggy, Zomato, they are liable to pay tax under 9(5). So the moment you become liable to pay tax under 9(5) as a eco, you need to mandatorily take registration. Supplying goods or services through e-commerce operator where TCS is collected. But here government has given some relief. Services through e-commerce operator up to 10 lakh 20 lakh in current year, no need to register. So that means though here compulsory registration is given, but using section 23 which talks about not liable to register, government has given some relief saying that services up to 10 lakh 20 lakh, even if you are supplying online, no need to register. Then goods industry became angry. Goods industry said give us something as well. Government gave it for goods industry as well, and now it says goods supplied through e-commerce operator in preceding financial year and current year, the turnover should be up to registration limit. Then in that case you will still be eligible for not taking registration and sell online. But for goods, when they gave this point, one difference is services it's only current year turnover, but goods you have to check both current year as well as previous financial year. Now PAN should be there. He has to inform that PAN and address on GST portal and take a enrollment number. This address needs to be given. Cannot be in more than one state. He cannot supply through e-commerce operator in more than one state. Then eco allows only when the enrollment number is available, and lastly interstate supply is not allowed. So government wants to encourage small people, I mean small retailers who normally sell within the state and they are unregistered. So can they continue to be unregistered and sell online? The answer is yes. So does the law provide relief for both goods as well as services? Yes, goods as well as services, both people selling online can sell online without taking registration because 23 is giving them a relief. Then let's see the next one. CTP and RTP, casual taxable person, non-resident taxable person. Then you have agent covered under schedule 1, a person liable to deduct tax or collect tax, and finally you have OIDAR, online information database access retrieval services, and ISD, input service distributor. Both of them have to compulsory take registration. OIDAR, it talks about a person where OIDAR is outside India and he is providing service to a person in India, being a non-taxable online recipient, and that's when OIDAR person has to take registration in India compulsorily. Okay, then there are some products where you don't get 40 lakh even though these are goods, because see normally what is the limit for goods? 40. But for pan masala, tobacco, ice cream and bricks and tiles, only 10 lakh 20 lakh will apply. 40 lakh limit will not be applicable for these four. Careful, aerated water is not there, and here the law does not talk about manufacturer. It can be a trader or a manufacturer. For both pan masala players will not be eligible for 40 lakh. Now let's see section 23, not liable to register. 23 clearly says if you are exclusively supplying exempt goods or services, then you are not required to register, or you are exclusively supplying something which is covered under RCM. If something is exclusively being supplied which is covered under RCM, again no need to register. Handicraft goods, notified handicraft goods interstate up to 10 lakh 20 lakh, no need to register. Agriculturist, being individual or HUF, no need to register. So these are the people who are not required to register. Now the question is, which is stronger? 24 is stronger or 22 is stronger? 22 versus 24. 24 is stronger, compulsory registration. 22 versus 23, because 22 is saying persons liable to register and 23 is saying persons not liable to register. 23 is stronger. And 23 versus 24, 23 is stronger. That means if a person is covered by 23, he is not required to register even if he is covered by compulsory registration. Now 2 points, that is exclusively exempt and agriculturist. These two come from 23.1. 23.1 even today does not exclude 24. It says 23.1, but 23.1 is a stronger provision. When we talk about 2, 3, 4, 5, these 4 points come from 23.2. 23.2 clearly says that it overrides 24. But 23.2 is a weaker provision. 23.1 is a direct provision not liable to register. 23.2 gives an exemption from registration by virtue of a notification introduced by government. And hence, I believe that 23.1 is anyways more stronger than 24. Hence, the law does not mention it. While 23.2 was a weaker provision, and that's why government gave a relief saying that 23.2 will override 24. Net result, 23 will always override 24. I think they will ask you questions from 23.2, that is point number 2, point number 3, point number 4, point number 5. So be careful on these 4 points. Now, say suppose you are supplying goods and you are also earning interest. Interest is a service. Will you still be eligible for 40 lakh limit? The answer is yes. This is a specific relief which is available. But sir, what if I am providing any other service? Then 20 lakh limit will apply. What if I am providing any other service also earning interest? Then also 20 lakh will be applicable, because the relief is only when you are exclusively supplying goods plus you are earning interest. Then comes section 25. 25 first talks about when is the effective date of registration. If you apply within 30 days, the effective date of registration is date when you were liable to register. If you apply after 30 days, then effective date is date of grant of registration. How does the process work? Part A, you fill PAN, email ID, mobile number. PAN is verified with CBDT database, and email ID, mobile number, which was given while taking PAN in the CBDT database. 2 OTPs, you enter it, you get a TRN. What is TRN? Temporary reference number. Then you move on to part B. You have to fill specified details and you have to choose whether you want to authenticate Aadhaar or not. If you select that I want to authenticate Aadhaar, you have to complete it within 15 working days. Then it will be forwarded to proper officer. If you are satisfied, then if officer is satisfied, then grant of registration. If officer is not satisfied, he will issue a show cause notice. You have to reply within 7 working days. Again, if he is satisfied, grant, and if he is not satisfied, then he will reject the application. Now, if officer does not take any action after it is forwarded to him within 7 working days, then deemed registration. And same point is applicable here also, but this is after reply and this is first application. Now this first application 7 working days can be replaced by 30 days if you fail to authenticate Aadhaar, or don't choose to authenticate Aadhaar, or you don't complete it within 15 days, or proper officer feels it as a fit case to do physical verification before grant of registration. And you are also aware now there is biometric Aadhaar authentication throughout India. And last one, if it is identified based on risk parameters and data analysis by the common portal, where common portal identifies it to be a risky case. Then 26 is deemed registration, that registration under CGST Act is deemed to be registration under SGST Act. 27 deals with CTP and NRTP. Who is a CTP? CTP is a person who occasionally undertakes transactions involving supply of goods or services in the course or furtherance of business in a state where he does not have a fixed place of business. So I have a business in Ahmedabad. I go to Karnataka to sell some goods. In Karnataka, I have to take a CTP registration if I intend to supply in Karnataka while I am there in Karnataka. Same way, if instead of being in Ahmedabad, I was in US and then I come to Karnataka, then I become a NRTP. Non-resident taxable person is a person who does not have a fixed place of business or residence in India, and he has come to India to occasionally undertake transactions involving supply of goods or services. Now, there are 5 key points which you need to remember for CTP and RTP. They have to apply for registration at least 5 days prior to the commencement of business. They have to deposit an amount which is estimated amount through e-cash ledger. Estimated tax liability, CBIC has clarified that gross liability is not required to be deposited, net liability is to be deposited. That means output minus ITC. They cannot start business until and unless they have a registration certificate. What will be the validity? 90 days or days mentioned in application, whichever is lower. And can an extension be sought? Yes, additional 90 days on payment of additional amount. Be very careful of one thing. If you are seeking additional extension, you'll also have to deposit more money. Now, NRTP may not have a PAN, so he can take registration based on passport number or registration number in his other country. Sir, after 90 plus 90, total 180 days, can I seek further extension? CBIC has clarified that no extension will be given beyond 180 days, even in case of long-running exhibitions. Now, where all did we see CTP and NRTP? Composition scheme. Both CTP and NRTP cannot avail composition scheme. Compulsory registration. Compulsory registration, both CTP and NRTP are required to take compulsory registration. ITC block credit, you saw a point of NRTP. NRTP cannot take ITC of any goods or services purchased by him except goods imported by him. And GTA RCM, there is one point, specified person. In that specified person, CTP is mentioned, that CTP is required to pay tax under RCM. Okay, then coming to amendment. Amendment, there are 2 major areas, core and non-core. See, core, you have to go through the process. You have to file an application within 15 days. It will be forwarded to proper officer. If he is satisfied, well and good. If he is not satisfied, he will issue a notice. You have to reply for that notice within 7 working days. Again, if he is satisfied, good. If he is not satisfied, he will reject the application. And first part, when it is forwarded first time, if he does not take any action within 15 working days, deemed acceptance. Second, after your reply, if he does not take action within 7 working days, deemed registration. So the deemed registration points are as it is. Now, which are core areas? 3 areas are considered as core: name, address, addition or deletion of partner, director, trustee. All these areas are considered as core areas. All other areas are considered as non-core areas. Non-core areas, direct approval happens. Change in PAN is not a amendment. It will lead to cancellation and you have to take a new registration. Because if PAN changes, please understand, if there is a change in PAN, then in that case, the registration number is completely dependent on PAN, and if PAN changes, you'll have to take a new registration and get the old registration cancelled. Okay, now let's talk about cancellation. Okay, now let's talk about the circumstances of cancellation. First, application by registered person, where I make an application for cancellation. Second, officer can suo motu cancel the registration. Now, where will I make an application for cancellation? First, whenever there is a discontinuance of business. If there is a discontinuance of business, then I will apply for cancellation. Second, if there is a change in constitution of business, sole proprietor changing to partnership firm changing to company, or a person is no longer liable to register under section 22 or 24. Earlier I was making exempt supply, now I am not making that particular supply. Now my entire taxable supply has become exempt supply. Earlier I was supplying interstate goods, now I have stopped supplying interstate goods. Earlier I was taking GTA service where I was covered under RCM, now it is not GTA service, now I am taking courier service. In these cases, then taken voluntary registration but opts out of it. So if I have taken voluntary registration but opt out of it, again the registration can be cancelled by me by filing an application. So first, what will I do? I will apply. Once I apply, if the officer is satisfied, he will give me cancellation. If he is not satisfied, he will issue a show cause notice, and I have to reply within 7 working days. Again, satisfied or not satisfied, same way. Then suo motu cancellation by officer. Can officer cancel it? Yes. First, if I have taken registration by fraud, willful misstatement, suppression of facts. Second, I have not filed my returns for 6 months. For QRMP, it is 2 quarters. For composition, not filed return for 3 months beyond due date. Then, taken voluntary registration but did not commence business for 6 months. And last one, various contraventions. What are the contraventions? First, I have supplied invoices without goods or services. You understand invoices without goods or services? Supplying mere invoices, fake invoices. Then carrying business from a place other than registered place, or section 16 violated. I have not followed section 16. Mismatch between 1 and 3b. Section 16 is all the conditions to avail ITC. Rule 86b violated, we will discuss in payment chapter. 1% you have to pay through e-cash. If you have not done that, then, and bank details not given on time. In all these cases, officer can cancel it. Plus one more additional case is, say suppose recipient, my registration is cancelled. Now if my registration is cancelled, I will apply for revocation. If I get the revocation, I have to file the returns within 30 days. If I don't file the return within 30 days, again my registration can be cancelled. How will the process work? Here officer will issue a show cause notice. Then I have to reply. If he is satisfied with the reply, he will not cancel. If he is not satisfied with the reply, he will cancel, because here he wants to cancel. Now during this period, see, all this will take time, from application till end, from show cause notice till end. During this period, should I file GST returns? Can I make taxable supplies? The answer to this is given in suspension. If I apply, suspension is effective from date of application or date from which cancellation is sought, whichever is later. So say suppose I file an application today, but I want cancellation from a date 5 days prior. So from today the suspension will be effective. Suo motu, if officer is issuing a notice, then officer will determine the date from which suspension is effective. Now in suspension, I will not be able to make taxable supplies. That means I cannot collect tax from customer. And second, I am not required to file GST return. There are 2 cases where deemed revocation of suspension happens. Say suppose I have not filed returns for 6 months, and then when I get a notice, I immediately file the return before cancellation, then the suspension is deemed to be revoked. Same way, bank details. Say suppose I had not given bank details. Now suspension happened. show cause notice was issued, I immediately gave the bank details, then suspension is deemed to be revoked. But these two deemed to be revoked suspension cases will happen only before cancellation. Does officer has a power to suspend even without giving opportunity to be heard? Yes. There is one point that where he finds significant mismatch between what I declared and whatever is coming online, like 1 and 3b mismatch, 2b and 3b mismatch, then he may suspend the registration even without giving an opportunity to be heard. So without giving an opportunity, he will suspend the registration. Thereafter, before cancellation, 30 days time limit will be given. Now, what happens in cancellation? Basically, a registered person becomes a unregistered person. So you will have to reverse ITC. How much ITC should you reverse? Inputs, full ITC or tax on transaction value, whichever is higher. Capital goods, proportionate to remaining life or tax on transaction value, whichever is higher. And if there is any balance in e-credit ledger after these ITC reversals, that balance will lapse. Okay, then coming to the last section, section 30, which deals with revocation of cancellation. See, revocation of cancellation can be applied only when suo motu officer has cancelled it. What is the time limit? 90 days from the receipt of cancellation order, plus one extension of additional 180 days can be sought from a commissioner or officer authorized not below additional commissioner. Now once I make an application, if officer is satisfied, he will revoke it. Within 30 days he has to revoke it. If he is not satisfied, he will issue show cause notice. I will reply, and from my reply again he will get 30 days to decide. There is no concept of deemed cancellation or deemed revocation of cancellation. Deemed is only there in registration and amendment, no other place. Plus, section 30 has one important point. All the returns up to the effective date of cancellation should be filed before applying for revocation, and all the returns from effective date till order of revocation should be filed within 30 days from the date of order of revocation. I again repeat, if the effective date of cancellation is here, then all these returns should be filed before making application for revocation. Before you apply for revocation, you have to file all these returns. And all the returns from effective date till order, this you have to file within 30 days from the order of revocation. Just be careful of this one point when it comes to registration. Yes? Okay, so this was about registration. See you all in the next video.